Hey, welcome back, everyone. Hey, look, let's do a quick margin update. Margin dividend investing update. Of course, you know that I've gone on margin, and we're going to look at the chart here and talk about when I did this and where we're at now. But I want to give you an update as to where I'm at. If you've been following this journey, we went on margin back on February 28th. We bought QDTE. This was literally a day before the market tanked. It corrected some 10% on the S&P 500, and then the tariff news came and it fell another 11%. Now, QDTE uses the NASDAQ, so QDTE fell some 21%. That was incredibly stressful when you're using margin. Now, we understand that when we're on margin, if we don't give ourselves a margin buffer or enough non-margin buying power, we could actually get a margin call. And if we don't bring more collateral to the table, your brokerage will sell equal amounts of all your holdings to equal the collateral they need. So it's very important to have non-margin buying power or a margin buffer. Part of the reason I'm doing this entire series is because on YouTube, so many people make it sound so simple that they're just rolling in the money, knocking it down. Well, that is somewhat true because I'm going to show you my numbers. You can make good money on margin. But boy, I'll tell you what, they don't talk about what could happen and some of the pitfalls. That's why I'm doing this video series. We talk about the pitfalls as well as the successes. So, as a part of this video, we're going to talk about my margin buffer and how it affects my account. But let's start off in the margin calculator. I've been talking about this quite a bit because just like the poor man's cover call tracker, we have an initial trade setup. It's become the golden rule number one in the poor man's covered call investment strategy because if you don't have your initial trade setup, you could really find yourself buying Leap's call options that are way too pricey, and the chances of you being successful are slim to none. Well, the initial trade setup has to be ran. Well, we have an initial trade setup in the margin calculator. Now, it's pretty basic, and it also accounts for the taxes. That's very important because those are things that are left out. Even in a lot of my videos, I don't like to talk about taxes because everybody has their own tax situation. You might have a write-off and I might not. But when it comes to this margin dividend investing, we're probably going to have to pay the tax man. Now, inside an IRA, a lot of people say, are you trading this inside an IRA? Do understand, inside an IRA, you cannot use margin debt. You cannot. You will be given margin, but that margin is only for unsettled money. It allows you to day trade and swing trade, and that's what the government set up IRA margin for. You cannot borrow money in an IRA and do what we're doing here. So chances are you're doing this in a taxable account. That's why I emphasize we have to pay the tax man. I call it the tax bucket, and what I love to do is just pick a dividend paying stock. My tax bucket dividend payer is XDTE. I actually created a side account, and that side account, any money that's in that side account gets invested in XDTE. That's going to pay the tax man. Well, at least throughout the year, it's going to give me that confidence that if I need to pay the tax man, I have the money. Now, again, all of our tax situations are different, and hey, I may not even have to pay taxes if I take some big hits during the year. But with that said, the calculator always assumes paying the tax man. Now, looking at that calculator, that initial trade setup, you can really get a feel as to where you are in any given trade. You can really get a feel as to your initial trade setup, what the numbers look like. Now, I know you might use your margin calculator from your broker, and that's fine, but this is the number I want to see. How much is going to be my margin interest and how much am I going to pay the tax man? How much is my free and clear cash flow? That's free and clear cash flow every single month. I paid the tax man. I paid the margin interest. In this scenario you see on screen, $1,014 free and clear cash flow. So I want you to use the margin calculator. Inside the margin calculator is the initial trade setup, the margin tracker, the margin tax bucket, and what I call the worst case scenario tab. You can use this for your tax bucket if you're going to take your tax bucket account, right? That account that I created on the side, if you want to make that marginable and buy a dividend paying stock. See, that tax bucket has a dividend paying stock. I'm sending money to it all year long, and then the dividend paying stock is adding more cash flow, paying down the debt. Well, in this case, I went ahead and created a special tab for that. Now look, I also added the margin dividend covered call tab because my daughter asked me about BITO. She owns 400 shares of BITO and she wanted to go on margin. So I said, look, let's create a calculator so we keep the numbers in front of us. I even created a video for it. This is actually very, very helpful because a lot of people go on margin buying stocks and selling premium against them. What you need to understand is margin requirements, because when you use stocks like BITO and BITX and all those leveraged ETFs, your margin shrinks because the margin requirement is so high. Now, with that said, you got to keep the numbers in front of you. So let's go back and talk about this non-margin buying power or the margin buffer before I end talking about my numbers and where we've been and where we're at. So right now, when I borrowed this money, I wanted to keep about a $20,000 buffer. That means I could have spent another $20,000. But you know what? We were going to take baby steps, $20,000 buffer. You'll hear people on YouTube say, my gosh, you got $20,000 buffer. You're not using it correctly. Well, you know what? When the markets fell, and boy, did they fall. This is RDTE, and this is the S&P 500 weekly dividend payer. Look at this thing falling off considerably. And if I brought up XDTE, you would see the same thing. In fact, there it is. I get involved at the tippy top to do this experiment. Well, sure enough, when it falls, literally from the tippy top, it falls all the way down to about $30 a share. Now, I'm not saying this to be proud because I'm down on that position. In fact, I ultimately fell $18,000. But again, this is a long-term trade. If I keep this trade on and the numbers work out where I have free cash flow, then this is really a 2.5 year trade. The dividend income pays for the margin debt. I'm going to have all those shares free and clear when this is all done. As of right now, when I sold out of QDTE, if you remember, that's exactly what I did. I sold out of QDTE and I decided to get into IWMY. These basically do the same thing. They basically do the same thing. That's very important. Because when I sold QDTE and I jumped right back in the game with IWMY, I didn't get a wash sale. They're two different companies. They do the same strategy, but they do it on different indexes. No wash sale. That's beautiful because I'm down 18,000 on QDTE. Now QDTE rallied and it moved higher, so I wouldn't be down 18 grand right now. But the point is, I wanted that $18,000 for tax harvesting. Because this bad boy is going to produce tons of taxable income. And you could see we started this February 28th. It's now May 9th. I got to pony up $1,600 to the tax man right now. So you extrapolate this out to many, many months, I'm going to have to pony up quite a bit for taxes. Now, one last point on the margin buffer. I really do want you to understand this is your cushion. Your entire account is that number. A lot of people have created a special account, and maybe they moved a stock over there that they like, about 100,000. Then they go on margin. They might believe that the stock they moved is not on margin. This is the analogy that I want you to take with you when you consider this. Imagine you sitting at a lake. That lake is 100% cash. Everything in it is cashable. You can't borrow anything. The minute you turn that cash account into a margin account, everything in that lake becomes margin. Now, you're not on margin until you borrow 1 penny above the value of the collateral you put in, but it's all margin. Think of yourself looking at that lake. There's a huge C in the middle, all cash. You trip it over to margin, there's now a large M in the middle. Now, this is very important to understand that everything in this account now is marginable. And if you get a margin call, they will sell equal amounts of every single share to get the collateral they need to bring your account up to standards. You have to understand this. This is why I make a huge effort to try to tell you that everything in that account is marginable. And it's margin interest. See, that's debt. And when you take cash out, you're basically taking a loan against your own money. Need to understand these things. Now, one could say if I'm generating thousands of dollars in free cash flow, it doesn't matter. And you're right. That is how you could look at it. Just make sure your numbers are right. My margin buffer has moved higher. Why? Because inside the account, remember, everything in the account is margin. Inside the account is moved higher. Okay? So now my non-margin buying power has moved higher, giving me even a bigger cushion. Just make sure you don't get greedy and say, wow, I had 14,000 in non-margin buying power. Now I got 19. I could take $5,000 and go on more debt. Please be safe. Don't be sorry. We don't want to be sorry. Now let's finish up with my numbers. So as of right now, these are all real numbers. I'm going to get a margin interest bill coming in. So that's probably going to be about $216. We have moved this up from 2,700 shares on IWMY to now 3,200. So my margin interest debt might be a little bit more. But remember, that's a bill that comes in and there's not a bill. What happens is they reduce my non-margin buying power. They basically slap more debt, right? So that is going to come in. You can see I've made $4,800 in dividend. That's cash flow coming in, feeds the margin debt. Taxes, $1,600. I have not pulled out for taxes. My thinking here is that I'm going to take this out at the end of the year. I don't want to take this money out, put it into another account, and be charged 8%. I'm just going to leave it in there. Now, the margin interest, you can see that's $414. Think about that for a minute. Let's throw on another $250. This will be essentially 3 months. I will have made $4,800 doing this strategy. My margin bill for borrowing their money to do this will be in and around $650. So here I am collecting $4,800 in upfront cash flow for $650. That's incredible. Now, I just have to be disciplined enough to pull out the taxes so the tax man doesn't rip me come tax time. Now, before we get out of here, members, I want to remind you on the Download Hub, we have an area where you can download my smart guide to using margin for dividend investing. That is posted. I want you to go there. I want you to download it and read it and look at it. I keep it super simple. These chapters are not that long. They bullet point and highlight the most important parts of all of this. Just look at the chapters. You can see the chapters are really geared towards helping you understand how margin works, how margin requirements affect our margin debt, so on and so forth. This guide is also going to have a phone app where you can actually download the phone app and you could have the guide on your phone. The chapters are nice and easy to read, and I want you to download that guide. The phone app is coming. Now, what I'm going to do is I'm going to add chapters that actually talk about how to invest in dividend payers. And we're going to talk about my experience just as I explained in this video. But more importantly, we're going to talk about NAV erosion and things that you need to know. See, those YouTubers don't want to talk about all that stuff. But boy, I'll tell you what, that can break you if you are not prepared. If you're not informed, not prepared, you will go broke. That's why I try to educate through this process, if anything, to help you up your game. Hey, look, I'm going to leave it right there. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.